Prima.
All right, let's move on. We've got lots of companies to chat with. So Metro Brands, they reported a steady quarterly performance this time. Nissan Joseph, CEO at Metro Brands, is now with us on the show. Thank you very much for joining in. You've clocked in about a 9% kind of a top-line growth in the current quarter. You'd spoken, the aspiration, sir, has always been sort of a 15% revenue CAGR over the medium to long term. For FY26, what kind of growth can we expect? And how is the consumer sentiment and the same store sales growth for you?
Yeah, I think, good morning and thanks for having me. I think as we look forward, we see the quarter starting to maintain the momentum and maybe build a little bit towards the back end. But I think what's important to note here is if you go back to the pre-COVID quarter of 2019, we were up 101% over that quarter, and that is a 12% CAGR if you look at that period of time. And I'm also including the COVID year in this. If you pull that out, it's definitely coming into our guidance of 15%, the mid-teen range. And I feel confident that, whether it's this quarter or next quarter, we will start getting back to that 15% gain.
Okay, so you should build on the momentum and get to 15% kind of a revenue growth. I'm presuming that's the festive season push also. So Q2, Q3 should see a 15% revenue run rate?
No, that's not what I said. I said, we will get back to that 15% CAGR growth. But we remain quite confident about what's happening with the economy, what's happening with our business. We've had 2 quarters where we've had almost double-digit growth in an environment that hasn't been the same for a lot of our peers. So I think we'll continue that momentum trend and we'll start building back towards it.
All right. And the long-term margin guidance of around 30%, you can hold on to that mark?
I think we've always guided to a long-term CAGR of 15%, Nigel, and that's something we're very comfortable with.
On the margin parameters, what I'm asking you.
On the profit margins, we've guided to mid-teens on the PAT margins, and our last quarter is a good example of that. We were well into the mid-teens in
Yes.
profit margins, and that's a guidance that we're very comfortable with in the long term. Would it go a little bit left and a little bit right as we make investments into new businesses, into marketing initiatives, into people investments? That it might do a little bit, but overall, that's what we have guided to.
How many stores are you planning to add, sir, in FY26?
So last quarter, we added 23 new stores, though we closed 3 stores. And we're starting to see momentum build up on the new store front. And we're pretty confident that we'll get back to a decent run rate. I think what's exciting in there, though, is that last quarter, we opened 4 walkway stores. And, it's a chain that we haven't been doubling down on a lot. The previous year, in the full year, we only opened 4 walkway stores, whereas in the last quarter, we opened 4. So we've already matched what we've done the year before. And we intend to quite grow that channel quite well as well, on top of our Metro Mochi and our Crocs. And of course, we now have the Foot Locker chain and soon to come Clarks.
Okay, all right. Give us a few more details. When does Fila break even?
Fila is breaking even. We've gone through the cleanup phase of Fila. We're now in the repositioning phase of Fila. And the only reason it may not is, we're going to distort quite a bit of our marketing investments into Fila, as you have to when you reposition a brand. It's not a cheap exercise, but it has long-term benefits to it. So, Fila, if I pulled out the marketing spends that we plan on doing, is definitely a break even already. Now, the question is, how much of the marketing spend do we do and when do you get it? And there's always a little bit of a lag, Nigel, between when you spend and when you get. So we're quite comfortable with that. And that's what I alluded to earlier. You might see our profit margin blip this way or that way, left or right of the mid-teen mark. But it would only be because we're starting to, make investments into technology or people or more importantly, into marketing.
Interesting. Let's, Fila, we'll keep an eye on that journey. But Fila, Foot Locker, New Era, they're still small, right, in your scheme of things. What do they contribute right now? And where do you see that number headed?
Yeah, so as you said, they're very low single-digit contribution if you add them all up together today. However, when we look to the future and we see what's happening in the athletic space, when we see what's happening in the casualization space, the athleisure space, we feel pretty good about all those 3 businesses being a substantial part of our revenue as they grow, albeit it'll come in stages. It's not going to be an overnight thing happening because we don't intend to slow down the other businesses as well, right? It's not like we're stopping everything else and we're growing this. We plan on growing everything quite aggressively and quite equally.
Okay. Correct me if I'm wrong, but I think your quarterly sales per square foot has declined in Q1 by nearly 3%.
Yep, that's absolutely correct. And what you're going to see is that number is also going to blip. So for example, the more walkway stores we open, that number is not as strong in the walkway chain as it is in a metro chain or a Croc Street chain. It is really more a reflection of the mix of stores that we have as opposed to the actual sales per square foot. If you look at the top line numbers, we have been growing. So that is not a major concern on our part. But that's a number that is going to seem a little erratic from time to time, simply because it's heavily weighted towards what the stores do in terms of new stores opening and which one of our chains is having which one of our banners is having a little bit more of a accelerated growth versus the others.
So does that mean that your top line growth is largely going to be driven by an increase in the retail store addition that you do?
No.
Is that going to be the driver of growth?
I think we have a three-pronged strategy for growth. One, of course, is same-store sales growth. And as you know, the same-store sales growth for all of our industry has been a little challenging these last 2 quarters. But I must tell you, though, don't forget, we've had a 15% CAGR growth, even with last quarter's number over since COVID. It was 12, but if you pull out the COVID year, it'd be closer to 15, right? So it's not like, and that 15 would have an element of same-store growth in there. So it's not just new stores. So it is same-store sales growth, it is new stores, and it's, of course, new banners as well.
Always a pleasure having you on the show, sir. And your first quarter, what was important was also your e-commerce business did return to the growth path. Thanks a lot for joining in. We'll track you on some of these numbers.